after today, I think, after that meeting, which maybe shows some thawing in that relationship between the US and China.
Yeah, which would definitely be a positive. And that's kind of where Airbus fits in the middle of that, right? Like in the middle of sort of the West versus China relationships. That's where you get the Airbus situation.
It was interesting. I was talking to Guillaume Faury, quite cautious, talking about not being naive about the relationship with China and how it's going to develop from here. So I think they're certainly keeping a big eye on what is happening. So that's one of the stories certainly we're going to be focusing on today, and that's why I'm here in Berlin to talk about that. But the other one, as you've talked about already, is this cold water that has been sort of poured on the markets by the Fed. Chris Waller certainly at the forefront of this. I'm really listening to hear what Lael Brainard has to say, talking about the facts that the rates are still heading higher and officials are not close to a pause. And this is basically coming through to our question of the day. Are we in for a reality check from the Fed? Is this a reality check from the Fed for markets? Well, let's talk about this a little bit more because I think it's going to be useful as we work our way towards hearing from Lael Brainard a little bit later on. Bloomberg's Kriti Gupta and Mike McKee joining us. Kriti, the markets got very excited. The markets got very, very excited post that print we got on inflation. Feels like a long time ago now. But in some ways, the reaction outdistanced what the data actually told us. And I'm now wondering how the Fed needs to finesse that. How different is the market set up now as opposed to where we were pre-CPI?
Well, Guy, I think context really is everything when you talk about that particular report. And yes, a 5.3% rally on an inflation print by any standard is a massive rally, one that was really expected to be pulled back the next day, and we still didn't see that. So there are technicals here being played into today's market trade that is a reaction of what we saw last week. That being said, also keep in mind the context here, because 11 out of the last 12 inflation reports, economists were dead wrong, and the market was punished over and over and over again. So there is an argument to be made for the bulls who do actually think that 5% was justified, was simply the idea that perhaps because we've had 10 months of carnage and because the terminal rate is stalling out, therefore there is a bull case for equities. And remember, a lot of this was waiting post midterms as well. So it wasn't just a question of the inflation report, it was a question of getting the midterms over with and then kind of going in and diving in. Some of the traders I spoke to said a lot of the shorts on the market, the broader market, I might add, not specifically individual names, were removed pre-midterm. So when we talk about positioning, also keep in mind that it's not just about one inflation print, because 7.7% is still a very large number. It's more about the idea that the base case perhaps is already priced into the market and they're ready to look even further past the spring of next year.
However, Mike, when you see the epic rally that we saw last week, that's not something that the Fed actually needs to see right now, is it?
No, and we did see the financial conditions indexes. You look at the Goldman Sachs one this morning, they eased quite a bit following that rally, and that's not what the Fed wants to see. It wants to see tighter policy, and I think that Waller is just going to be the first of a number who are going to make the case that you guys weren't listening when Jay Powell came out and said, don't worry about the rate of increases, worry about where we end up. And they're going to be ending up higher perhaps than the markets are thinking right now. We went under 5% in the Fed funds futures market after the CPI report. We're up close to it again today after Waller's warning. And let's see if Lael Brainard moves it up even higher.
Yeah. But Mike, does that mean that the Fed is not data dependent? Because the data are starting to improve. I appreciate it's one print, but we've been waiting for a print that tells us maybe we've peaked and maybe we're going to start to move down. And I appreciate that inflation may come down very slowly. I think one Fed official described it last week as being like a feather coming down. But nevertheless, that market, that moment for the market may have been reached. Why hasn't it been reached maybe for the Fed?
Well, I go back to a really brilliant line from Mary Daly, the president of the San Francisco Fed, who said, data is a plural word. They're data dependent, but they're looking for several months of declines in inflation. If we had 2 or 3 more months, then you might see them start to embrace the idea that inflation is going to go down. But we have a number of things that could go wrong in the future. We're looking at a government running out of money on the 16th of December. They need to extend that. We've got the debt ceiling fight that may come up here in the lame duck session of Congress. And of course, you've got the end of Russian oil buying by Europe on December 5th. Now, what happens to prices then? The Fed could still be looking at another inflation shock, and they don't want to celebrate too early.
No, they definitely don't. And then there is that sort of tipping point between when you get peak inflation and then kind of growth gets hit. That sort of tipping point within the market. And Kriti, I'm wondering if we're there yet, if people are saying we're there yet, or that has yet to come, when we start to worry about the growth situation rather than the inflation story.
Well, it's interesting that you mentioned that because Goldman Sachs very specifically made this point over the weekend, the idea that inflation is going to come down way faster than anyone expected. But it also brings to the question whether this is just disinflation or active deflation, how the economy is actually going to take it. Because when you start to see that pullback in prices, the wealth effect that, by the way, that has been perhaps driving a lot of these incomes for average Americans, that kind of gets removed as well on top of the stock market carnage as well. So I think when you talk about the inflation versus growth perspective, you also have to talk about the willingness to consume as well. And I think very quickly, as you see these inflation numbers come down, I'm not talking down to like 7.5%, for example, from 7.7%, but back perhaps to 3-4%, which some economists are really estimating for next year. That's when perhaps you're going to start seeing wages become more sticky, whereas prices stay stickier at an even higher level. And that's really where you're going to see more of the pain on the growth side, because fewer and fewer Americans are actively going to be spending as much as they were, say, this year.
Mike, let me ask you a slightly different question, a more tangential one. Is it possible to quantify, do you think, how you look at the relationship between China and the United States, and what détente, and I appreciate that I may be overusing that word, but maybe an easing of tensions could mean in terms of economic data?
Well, not much in the short run because this all takes a very long time to play out. But if we do see something of a thaw, then the first question becomes, what about the sanctions each country has on each other's trade? Do those start to go away? And those would have positive impacts on both inflation and on production here in the United States. I don't think you're going to see much change in defense spending from either. So that means there's still going to be a fiscal impulse from it. But just ratcheting down the tensions will also relax people a little bit more, particularly when you think about trade with Asia and other countries outside of China. There may not have to be as many people trying to get around the Chinese as possible, and some of our allies may see an improved trade picture which would help their economies and therefore spill over into the United States. So all in all, it would be a positive if we do see something of a thaw, but it will take time to make sure that's in place.
Right, unless they're buying all the LNG, and then that's not as positive for the global economy. All right, hey, Kriti, Mike, thanks a lot. Really appreciate it. Thanks for kicking it off with us. Bloomberg Security Gupta and Michael McKee. All right, coming up, Goldman Sachs saying that inflation will ease significantly next year. So what should you be buying on this? We're going to get to a two-handle by the end of December of next year. We're going to speak to Alexander Wilson Elizondo, Goldman Sachs Asset Management, Head of Multi-Asset Retail Investing. This is Bloomberg.
earnings season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
A big beat. Stock is up more than 8%, coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch? That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
On the one hand, I do see the potential for the rally to continue a little bit in the longer term. I think, frankly, on things like the election, that's already baked in. I think there's a lot of people who think the Fed moves have been exaggerated. We liked what we saw in the CPI print, but the thing we didn't like is we knew the Fed was going to come out and try to quash it with harsh rhetoric, and that's exactly what we ended up getting with Waller.
That was Lori Calvasina, head of U.S. equity strategy at RBC on the market rally, and that pushback we saw from Fed's Chris Waller. So that brings us to the question of the day. Are we looking at a reality check from the Fed? Joining us now for her take is Alexander Wilson Elizondo, Goldman Sachs Asset Management, head of multi-asset retail investing. Alexander, great to see you. I appreciate that the Dow's slightly higher because of biotech, but nonetheless, do we get a Fed pushback after that epic rally that we saw last week that then, in essence, loosened financial conditions?
Yeah, we do. We completely agree. We think that ultimately it's about the level, not the path. We're currently standing at about 3 times their ultimate target. There's a lot of work to be done, and we think they'll remain restrictive. If you look at what happened last week, we actually view the price action to be somewhat unhealthy. And that's really what happens when you have a lot of demand meeting a vacuum of liquidity, and you see those 5% pops. Now, can this have legs? Yeah, we do think it could actually have some legs, and that's because there's a lot of money on the sidelines, and not really FOMO, but there's this fear of underperformance going into year end. So we do think there could be some legs, but ultimately we think we test some new lows coming into next year.
Okay. So there are better buying opportunities coming up, possibly at the beginning of next year. What will be the catalyst for that? Will it be a reassessment of the Fed? Would it be a reassessment of the inflation picture? What is going to drive that?
So on the equity side, we're very much focused on earnings growth. We think this year's been all about the re-rating of multiples. Next year will be about earnings growth. But one of the actual big takeaways for us from last week was actually that there's a temporary ceiling on the terminal rate. We're going to see less rates volatility, and for us, that's an opportunity to reassess some risk assets, in particular credit. There are some pockets of credit we think look extraordinarily attractive. And in the context of, having a 6.5% yield in investment-grade credit, we think that there's some real opportunities out there.
Is that a dump equities by corporate credit situation?
We think we prefer credit over equities. We'd rather be levered to duration than growth at this point. And when we look at IG credit, you're looking at 20th percentile valuations since 2005. Corporate America has addressed their balance sheets. They've termed out the maturity structures. And there's a lot of positive convexity. So when you look at dollar prices on some really high quality names, some that we'll see report this week, they're trading 50, 60 cents on the dollar. So from our perspective, from a long-term holder, there's really a lot of value there. And that's exactly why you're seeing tourists or non-traditional buyers come into the credit markets right now.
So Alexander, let's just explore that a little bit more. Are we in a position where if you are looking for yield and you've been looking at it for it in the equity market, say you've been a buyer of utilities or other similar assets, you should sell those because you're going to get a better opportunity in the credit market? Is that the trade right now? If you're looking for yield, don't go looking for it in spaces within the equity market. You're going to get it in credit.
There's still some attractive yield opportunities within equities. We do prefer to take that yield risk within credit, just given you're up in the capital structure. But you mentioned utilities. So we're focused on some of the more defensive spaces, just given our growth outlook for next year. Utilities are going to be large players in the transition towards a greener economy. They have pricing power. They push it off. So there's still a lot of attractive opportunities within utilities, both within debt and equity markets.
Just headline here, the DAX rises 20% from the September low. It looks to enter a bull market. You like U.S. versus Europe?
We're currently positioned in that way, but there are a lot of catalysts to the positive side that we need to be very thoughtful about. And some of those are, if there's some relief with the Russian-Ukraine tensions, the reopening of China, Europe is very levered to that. So we're cautious and cognizant of not just the left tail risks, but what are the right tail risks in the market, and how do we position for that? And where can we find value in doing that?
Alexandra, what does the 60-40 do next year?
The 60-40 portfolio from an outright risk perspective it's been challenged. Diversification has been difficult. Treasuries haven't given you that ballast. And we've really sought to find that ballast for volatility through commodities, cash, and trend-like allocations. Going into next year, duration's in a materially better starting point. We think that, given that the index has come down on duration, just given the move this year, that yields are up, that you are going to start to get that ballast in portfolios if you start to get, real growth declines going forward.
So Goldman Sachs, and I appreciate it's the research side, not you guys, but they had a note that talked about the core PCE measure declining to 2.9% by December of next year versus 5% now. That feels like a pretty rapid decline in core inflation. If that happens, how do you have to rethink your portfolio?
I mean, our portfolios, given that they're multi-asset, they're structured well and they're well diversified, and given that we're comfortable going into rates and credit, we would be in a very good spot. Ultimately, what we think is going to be important going into next year is what happens with the employment backdrop. So what is that relationship and the interplay between participation, people coming off the sidelines, openings, to people wanting to take jobs, and that ultimately is going to determine what we think will be the type of landing we see. So we think we're well structured and set up from a diversification perspective there.
Alexandra, what kind of inflation rate should we be building into our expectations long term for our portfolios? People are planning longer term. They need to factor that number in. Is it going to go back to 2%, or is it going to be 2 to 3 or 3 to 4?
I mean, that's the $50 million question. Effectively, what we're trying to say is, are there structural changes in the marketplace and economies that are going to keep inflation higher? We do think so, especially if you see, continued geopolitical tensions, onshoring, things of that nature. And so we ultimately think you should be prepared for a higher level of rates, a higher level of inflation going forward. But just because the Fed is raising rates or we're going to have a higher level of rate doesn't mean that bonds don't have a place in portfolios or that you can't be invested in the market. There's a lot of value and opportunity that's been created over the last year.
Alexandra, really nice to see you in the studio. Thank you very much indeed for dropping by and seeing us. Alexandra Wilson Elizondo of Goldman Sachs Asset Management. Thank you very much indeed. Still ahead, goodwill gestures between Presidents Biden and Xi in Bali. China broke off routine contacts, remember, with the United States after Speaker Pelosi's visit to Taiwan earlier this year. More on thawing relations between the two largest economies in the world next. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Amazon founder Jeff Bezos plans to give away the majority of his fortune during his lifetime. Bezos told CNN he will devote the money to fighting climate change and supporting people who can unify humanity. According to the Bloomberg Billionaires Index, Bezos is worth $123.9 billion, making him the fourth richest person in the world. Elon Musk says he's overworked. The man who runs Twitter, Tesla and SpaceX told a business conference in Indonesia that he's working morning to night, 7 days a week. He said it's not something he would recommend. Musk just scrapped Twitter's work from home policies. He's been known to sleep at work, sometimes on the factory floors. And London's no longer the biggest stock market in Europe. The UK capital has lost its crown to Paris. According to an index compiled by Bloomberg, the combined market cap of primary listings in Paris overtook that of London in US dollar terms. Economic growth concerns are weighing on British assets. Meanwhile, China's relaxation of COVID rules is boosting some of those French luxury shares. And that is your latest Business Flash. Sky.
Ritika, thank you very much indeed. Presidents Biden and Xi meeting face-to-face for the first time since the pandemic. This, of course, on the sidelines of the G20 in Bali. The 3-hour meeting kicked off with statements on the need for peaceful relations. President Biden reiterating that the US remains committed to its one China policy.
I absolutely believe there's need not be a new Cold War. I do not think there's any imminent attempt on the part of China to invade Taiwan. And I made it clear that our policy on Taiwan has not changed at all.
Joining us now from the G20 in Bali is Bloomberg's Anne-Marie Hordern. Anne-Marie, my sense going into this was that there was an expectation that we wouldn't see a significant thawing of relations. Have we just been surprised by how cordial relations were in this meeting?
I would say so, because the White House statement came out saying that Secretary of State Antony Blinken will be heading to China. Also, the fact they're going to resume discussions at the very senior level of both the China delegation as well as the U.S. Biden administration when it comes to things like climate change, like economic practices, like debt sustainability and relief, like what's going on in healthcare, and these kind of parallels that they want to work on. And a lot of this stopped, of course, over the summer after Speaker Pelosi's visit to Taiwan. We saw a very aggressive China in response to that. Many in the region also thought that potentially Speaker Pelosi was, it was a provocative act of hers, and this is why China acted in such a way. But clearly Taiwan is this red line for Xi Jinping. And in the Chinese readout, it says that they want to see the U.S. words meet actions when it comes to one China policy. This has been something we've seen President Biden a few times, most notably in September in a 60 Minutes interview, talk about the fact that he would send U.S. troops to defend Taiwan if there was an unprecedented attack. You see him here today in his statement, heard him speaking to reporters, and I was there at that press conference saying that the U.S. will abide by this one China policy, and at this moment he doesn't see what he says, quote, imminent threat to Taiwan.
Hey, Anne-Marie, quickly, do we know that Xi and Biden are on the same page? Not like with Saudi Arabia where we thought something happened in the meeting and then it actually kind of didn't and the U.S. was just kind of ghosted?
I'm not sure if there's any axis right now, and the U.S. is ghosted when it comes to parallels. In terms of what's going on with China, as Guy mentioned, there is this warming of a relationship between these two countries. U.S. is certainly not ghosted there. But we should note, in terms of concerns, there are allies around the world, whether it's in Asia or Europe, that have concerns on the U.S. practices towards Taiwan, like sweeping of the CHIPS curbs.
Yeah. All right, Anne-Marie, got to leave it there. Great reporting. Thanks very much. This is Bloomberg. about an hour into the U.S. trading session. Abigail Doolittle is tracking these moves for us. Like, we're trying to get a run higher here, but it's not really working.
Yeah, it's kind of interesting action here. A little bit not quite sure what's going on today on this Monday in terms of investors. We have had that big up week last week, but right now stocks kind of trying to make that run higher to Alex's point, but not quite there. One pressure, yields. We do have yields higher, and that, of course, we'll be talking about in just one moment. Christopher Waller's comments. That is driving the dollar higher, pressing risk assets. But let's also bring the DAX into the picture because it's up about 1%, set for a new bull market, up about 20% from its bottom. As for Christopher Waller, of course, these comments pressuring stocks more so earlier, and it's pressuring tech more so than overall stocks. But the Fed governor is saying we've still got a ways to go on rate hikes, suggesting that maybe the pace will moderate a little bit. But again, this idea that the destination, the terminal rate, that it could be higher yet. However, we've been talking about the bear market on the year, and if we go to the Bloomberg terminal and we take a look at the S&P 500 and this bear market rally that we're looking at, but put it into the context of the DAX, this might be the first truly encouraging sign that I've seen from a chart perspective relative to the S&P 500. So this is the bear market going down, down, down. We can see these bear market rallies right now for the S&P 500 in white, up about 11%. But take a look at that DAX, up 20% from the bottom, breaking out. Is the S&P 500 going to follow to break out? If we see some sort of a convincing breakout, maybe this is some sort of a bottom. It doesn't look that way, but certainly worth pointing out, at least right now. And then finally, one sector that's weighing a bit on the S&P 500 are some names. Well, actually, they've flipped higher now. So this is a part of that story as investors try to figure out what's going on. Oil itself off the lows, down about 0.5%. This, of course, after OPEC cut its demand outlook for a second day in a row. Earlier, Guy, and just minutes ago, these stocks had been lower, these energy stocks. Now they're flipping higher. So to Alex's point, investors trying to figure out what's going on here, making a push higher. Let's see whether or not it happens as the day progresses.
Abigail, thank you very much indeed. I think my trip to Berlin has been well timed with the DAX 20% up off its lows. We've also seen a little surprise in the form of the Infineon numbers this afternoon. We'll come back and talk more about what is happening with the European Chips Act a little bit later on. But let's turn our attention now to what has been happening in Bali at the G20. President Biden telling President Xi the United States is ready to work with China. President Xi, through a translator, telling President Biden there's a need to elevate the relationship. Let's talk more about this meeting. Robert Hormats, former Undersecretary of State during the Obama administration, joins us now. Bob, is this détente?
I wouldn't use the word détente quite yet, but it is certainly an improvement compared to where we were prior to the meeting, and the fact that there is going to be, as you mentioned, a series of follow-up engagements between Tony Blinken and his counterpart and other cabinet members with their Chinese counterparts is encouraging, because our two sides have really not been talking at very high levels for quite some time, and partly due to COVID, partly due to the overall tenor of the relationship. But this actually improves engagement, and I think that's a very positive development.
You've known Bob. Hi, it's great to see you.
Good to be here.
You've known Xi for a long time. Do we take what happened at face value? Do we trust this interaction?
I think we, as President Reagan said, trust but verify. But I would say this about President Xi. I've known him since he was party secretary in Zhejiang province. He's a very candid guy, and he prides himself on being candid. He doesn't hold back. And I think that he probably told President Biden what was on his mind, certainly made a big point on Taiwan, of this being a red line, numerous other issues. I'm sure he was quite blunt, and I think President Biden was as well. And that's actually very healthy. When I first went to China in the early 70s, Mao was then the party chairman and the leader of China. And he made an interesting point. He said, look, if we say everything is good and happy talk, no one will believe us. We have to demonstrate that we're talking candidly to each other, even if we disagree, but all so that the things we do agree on will have more credibility. But if you make it all happy talk, it won't work. And Xi is not one to make it all happy talk. He's one to be quite blunt. But he also wants to avoid a confrontation because he has tough issues to deal with at home. So he wants to be strong internationally, but deal with the tough issues at home. But you know, on a lot of issues like intellectual property protection and things like that, we've heard positive things from the Chinese before, and now it's an opportunity with these follow-up meetings to pin these down: trade secrets, intellectual property protection of things like 5G, quantum computing, AI, and medical research. We have to have trust, and we have to have a set of rules, and the rules have to be abided by, and we have to be able to monitor them very carefully. Otherwise, businesses who were used to be very positive on China are now a lot more doubtful about going to China or certainly sharing anything of high-level intellectual property with them.
Bob, are we at the point, though, where what we're trying to achieve here is ensuring that the relationship doesn't get any worse rather than making sure that the relationship gets better?
Yes, I think that that was the main objective here, to make sure that the deterioration did not continue, because it was getting worse, and there were numerous examples that we all see in the press that it was and could have gotten worse, and there could be danger points or miscalculations, strategic and other. So that was the chief objective. The second was to establish at least a framework of engagement that would at least hold out the chance of things getting better down the road. There were no breakthroughs at this point. I don't expect there'll be any anytime soon, but at least to have a process of senior officials meeting on a more regular basis, as we did before, even though we don't agree on a lot of issues and disagree strongly on some, at least engagement is helpful in avoiding miscalculations and does hold out at least the hope of progress in certain areas. We shouldn't expect miracles, but we should at least anticipate that they're going to try harder to avoid anything that gets worse and maybe find some areas of progress.
Well, to that point, so I might be making a leap here, but just a few minutes ago, we got a headline that the U.S. is sanctioning Russia-linked individuals and entities that are targeting Russian military supply chain. And it's just very curious to me that it comes an hour after this press conference. And I'm wondering if we learn anything from the relationship between Biden and Xi about Russia that sort of gives a push here for the U.S.
Well, that's a great question. I don't think we know at this point. I'm almost certain, well, I am certain that President Biden raised this issue. I'm sure President Xi indicated that they were not supplying Russia with any military equipment, although they have been giving diplomatic support. The next question is how much pressure Xi is willing to put on the Russians to stop all this killing of innocent civilians and some of the terrible things they're doing, bombing cities that have no strategic relationship at all to the war, just killing people. And I don't think the Chinese are comfortable with this, and the Chinese certainly have made the point they're not comfortable with the use of nuclear weapons. So I think they discussed this. Whether anything tangible will come out of it remains to be seen, but surely it was a major topic of discussion.
Bob, I'm sitting here in Berlin. The Germans have taken a much more mercantile approach to their relationship with China. We saw that with the recent trip that the Chancellor took. Do you think that policy is sustainable? Do you think its chances of success were improved today by the better relations that appeared between Presidents Biden and Xi?
Yes, I think that I'm sure the German Chancellor was very encouraged by this, since he was really the first major Western leader to go to China in the last several years. And he wants, as you say, to improve relations with China, or at least sustain them, in part because China is a big market for German products, particularly automobiles, but other things as well. And I think to the degree that the United States and China can avoid things deteriorating further and maybe make a little progress, gives him a little more comfort at home, and with the Chinese, that he is willing to work with them, and the United States is not going to be critical of him for doing so. He's sort of out in front of some of the others, but the U.S. is certainly not going to be negative on what he's doing if the United States is trying to improve relations also.
Before we let you go, we are coming up against the renewal of the grain corridor in Ukraine. Do you think that gets renewed? I mean, do you think that companies, insurance companies and shipping companies are going to be willing to take a risk no matter what happens on the 19th?
I think if there is not a renewal, a lot of these companies are going to feel that there's a higher level of risk and will be much more cautious. I do think, though, and I think you've raised an interesting point, this summit, the G20, not just the bilateral, the G20 is also going to be about food security. And there are a lot of emerging economies there who are going to put pressure on Russia, although Lavrov is going to be there and not Putin, but put pressure on other countries to encourage the Russians to renew the agreement. And I think they'll put pressure on China as a country close to Russia to urge the Russians to do this. So I think Xi will be able to demonstrate some greater degree of credibility on his policy of playing a constructive role vis-a-vis Russia and the Ukraine war if he encourages the Russians to allow this agreement to go forward, not just for bilateral reasons, because so many countries in the world depend on that food, and food prices are going up everywhere. So this is a good opportunity for the Chinese to do something constructive at the G20 and for other countries as well.
Really wonderful analysis. Thank you so much, Bob. I really appreciate your time today, Bob Hormats.
Always a pleasure.
Former Undersecretary of State joining us in studio. Thank you.
Thank you.
All right, coming up, regulators now investigating Sam Bankman-Fried and FTX for potential violation of rules following that crypto exchanges collapse. We're going to get the perspective from Eric Snyder, a Wilk Oslander partner and bankruptcy department chairman up next. This is Bloomberg.
This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. In Ukraine, President Volodymyr Zelensky visited the newly liberated city of Kherson. Zelensky spoke to troops there. Kherson was the first major city occupied by Russia when it launched the invasion almost 9 months ago. A Ukrainian counteroffensive forced Russian troops to withdraw. The CEO of crypto exchange Binance plans to push for global digital asset standards. Changpeng Zhao spoke in Indonesia in the wake of the collapse of Binance's rival, FTX.
There is quite a lot of players in our space that try to cut corners to grow quickly, and that actually destroys consumer trust. When they don't trust them, they don't go to them. They actually go to a platform they trust.
Zhao said there is a strong role for regulators to play, but the industry's problem can't be blamed on any single party. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Alex.
All right, thank you so much, Ritika. I should point out the CFTC chairman is talking at a conference saying that there's every precaution necessary with FTX. I don't really know what that means. I still don't know how you have authority over that. We'll talk about that in just a moment. So FTX is facing a criminal misconduct probe in the Bahamas. Its founder, Sam Bankman-Fried, was interviewed by local police and regulators on Saturday. We want to get the latest from the ground with Bloomberg's Katanga Johnson in Nassau, Bahamas, outside the FTX offices. What do we know so far?
Hi there. So far we know that the authorities, including the Bahamas Securities Commission, as well as police authorities, began questioning Sam Bankman-Fried on Saturday. That questioning turned into an actual investigation that was launched yesterday, though authorities have been clear to say that he has not yet been found of wrongdoing. And if he is found of wrongdoing, those authorities will make a recommendation to the local public prosecutor here, who will then actually announce the claims. Their investigation revolves around potentially whether on Friday customer withdrawals from FTX assets whether that was authorized by the Securities Commission, as FTX had said in a tweet. We learned on the weekend that the Securities Commission said they didn't suggest to FTX or in any way say that they should allow customers in the Bahamas to make those withdrawals. And to the extent that there's wrongdoing around that issue or other issues is where regulators seem to be focusing their attention today.
Katanga, is there any expectation that the authorities in the Bahamas will play a significant role in this investigation, in any potential legal proceedings that are going to be brought? What role will they likely play, do you think?
To the extent that there is wrongdoing found, regulators will sort of take the lead in simply making a recommendation as to what charges should occur from the Bahamas, given that FTX is headquartered here. We were told yesterday that they are working collaboratively, regulators and law enforcement officials here, but they didn't quite say to the extent that they're working with US DOJ or other authorities. But they are considering globally how the company, over the last week especially, and particularly on Friday, how they might have been collaborating, particularly to allow some customers to make withdrawals versus others. So simply put, it's too soon to tell.
Katanga, thank you very much indeed for being there for us. We greatly appreciate it. Bloomberg's Katanga Johnson joining us from the Bahamas. Let's continue to explore what happens now with FTX as it heads to bankruptcy court. We're joined by Eric Schneider, Wilk Auslander, partner and chairman of the bankruptcy department. Eric, normally in these kinds of situations, we have a ring fencing of assets, we have an understanding of what those assets are, and we have reasonably good visibility on what we're ultimately talking about. Here, I can't see any of those things being the case. The FTX filings look completely scant of information. There seems to be very little to work with. How is this going to proceed, do you think? How is this bankruptcy going to work?
Well, you make an excellent point. Normally when a bankruptcy is filed, if not a list of assets and liabilities, at a minimum, there's a list of creditors and an understanding of where the bankruptcy is going forward. With this filing, there was nothing, not even a list of creditors. The only thing listed was a bankruptcy petition and a list of the bankrupt companies. So I'd be very concerned at this point if the Department of Justice, which oversees bankruptcies, or the judge himself at this point doesn't get involved as soon as today to figure out where the assets are and who the creditors are.
Hey, Eric, do they have any jurisdiction, though?
The bankruptcy court does have jurisdiction because the first company that filed, Alameda Research, is incorporated in Delaware. Once that company files, then all the other companies can come in as related cases. So the answer is yes, the bankruptcy court does have jurisdiction, but there is not even an authorization to hire attorneys, to use money, nothing. So everyone's looking at the docket, and as pointed out, there's nothing there. And I was listening to your previous reporter. We're getting updates by tweets. The alphabet soup, that's government, SEC, FDIC, CFTC, they usually have oversight. But because this is completely unregulated, that's how we're getting that information. And that's a recipe for disaster.
Do you think those that had assets with FTX should expect any of those assets to return? This seems so opaque to me at the moment. What is your assessment of the recovery here?
Well, so there are two things, right? There's the value of the exchange, and I don't know if there's any goodwill in the exchange itself. There's also the value of the FTT, the cryptocurrency itself. And I have no idea where that currency is. We've heard that it's recently been moved to cold storage, hopefully to protect it. But in absence of any bankruptcy schedules that show you what they're holding, we can't tell. The reason you file bankruptcy is twofold. One, you want to stop creditors from taking all your money piecemeal, ripping you to pieces. And the second is to make sure you have a central place to hear all claims. But in the absence of any information, including what the assets are and what the liabilities are, we have no way of knowing what's going forward. And I'm doubtful that if there is currency there, that they're going to be able to figure out whose it is and whether there's even a market to sell it and monetize it.
Eric, I appreciate that you're in the bankruptcy department of your law firm. However, I'm wondering if you have any sense of the criminal liability here and how that conversation will also be unfolding.
Right. So we go back to the days, and the guy that's the chief restructuring officer now of FTX was also the CRO of Enron. The days of WorldCom, Enron, and Madoff were all cautionary tales of what can happen when you are opaque and you don't give the information out. So if in fact there was violations of the terms of service and those coins were used either for collateral or for other purposes, then it's entirely appropriate to have a criminal investigation. Unfortunately, I don't even know, and it's been unclear which government regulatory agency should oversee these transactions because there is no legislative oversight. So there will be investigations. Right now, I understand it's the FBI.
Final quick question, Eric. What lessons are we already learning from this about the way in future that this industry needs to be regulated, controlled, and understood?
So I think, again, like financial institutions, like commodity markets, like securities exchanges, cryptocurrency continues to be an exotic form of currency. And there needs to be regulations, including oversight, quarterly reports, as well as funds, so that if investors are defrauded or lose their money, there is potential recovery, which you have by government-insured institutions. Right now, for all those that put their money in, there's no way to get it out. So I would urge that going forward, if anybody invests in this, that you have a strong stomach and government regulation follows, and everyone should be hearing what you're reporting.
Yeah, it looks like Binance wants to be that backstop, but that has questions too. Eric, look, we really appreciate the analysis. A wonderful job. Thank you. Eric Snyder, Wilk Oslander, partner. This is Bloomberg.
So an interesting afternoon to be in Berlin, an interesting afternoon to be in Germany. We are watching the DAX coming up 20% off its lows. That's one of the first major markets to do that. So a real rally in German assets over the last few days. What is interesting as well is you're seeing numbers being posted by Infineon this afternoon. We'll come back, we'll talk about all of this in a moment. The European close is coming up. Those are the numbers we are looking up. We've got some great guests lined up. An exclusive conversation is also in the next hour with Lael Brainard, the Fed Vice Chair. This is Bloomberg. Monday, the 14th of November, European equities bid this afternoon. The DAX now up 20% off its lows. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
30 minutes to the close. Let's talk about what markets are doing here in Europe as we come in towards the end of the day. We're going to focus on Germany today. I'm in Berlin. The DAX is up 20% off its lows. The timing is perfect. We've also seen a surprise this afternoon in the form of Infineon earnings announcing a $5 billion investment package. This is Infineon basically trying to take advantage of the European CHIPS Act. We've seen what's happening in the United States and the efforts that are being made there. Europe is trying to follow up with that, and Infineon Infineon looks like it wants to play a big role in that process. The numbers also look solid. That stock is up over 6% coming through into the close. Little bit of weakness in the euro today, though not much. We are obviously watching very carefully what's happening with the Fed speak, and we're going to be hearing from Lael Brainard very shortly. Euro dollar down by around 0.2%. Last week we also heard that we were going to get some cost cutting from Amazon. We heard that Andy Jassy was taking a look at where he could cut costs. Abigail, we're starting to learn what those cost cuts might look like.
We certainly are, Guy. And before we take a look at what Amazon is doing on that announcement, let's take a look at some of the indexes here in the U.S. because the S&P 500 is essentially flat, but the Dow Transport's really outperforming, up 1%. This is mostly the components, the car stocks, the car rental stocks, airlines higher. NASDAQ Golden Dragon Index up for a third day in a row, gaining about 16% over the last 3 days. So we have this rebound for China tech, despite the fact that we have yields higher in the U.S. And then take a look at this. Bitcoin is rebounding a little bit after the whole FTX fiasco, the liquidity crunch, Binance saying that perhaps they'll help some of the other folks out in terms of with the liquidity crunch. As for Amazon, let's take a look at an intraday chart. I'm very curious to see what it's going to look like. I almost thought we could see it in the green. So Amazon earlier today, of course, we had that interesting announcement from Jeff Bezos to CNN saying that he plans to give away the bulk of his wealth over the course of his lifetime. That seemed one reason that Amazon was down. But on this spike higher, we just received an announcement that Amazon is planning to cut 10,000 workers as soon as this week. This, of course, following that announcement that you were talking about, Guy, last week, saying that there was a hiring freeze. When I left my desk, I thought that we might see Amazon turn into the green. Right now, not so much, taking a U-turn back down about 2%. Maybe investors want to see this company do more, Guy. The stock down 40% on the year, so investors, traders really want to see what they're going to do to help out their operations.
Yeah, we're going to need some more details on exactly what that is going to look like. Abigail, thank you very much indeed. Let's get back to the geopolitics. Presidents Biden and Xi holding a 3-hour meeting on the sidelines of the G20 in Bali. It's their first face-to-face meeting since the pandemic. A key takeaway, the need for warmer ties.
I absolutely believe there's need not be a new Cold War. I do not think there's any imminent attempt on the part of China to invade Taiwan. And I made it clear that our policy in Taiwan has not changed at all.
Let's talk about this relationship. Let's talk about how the European relationship fits into it. Jörg Groschel, the European School of Management and Technology president and professor of finance,